Hello and welcome to another edition of the Forex Technical Market Update for August 27th, Thursday, August 27th, 2015. And in front of us, we have the daily chart of the euro. And we saw that we're still in this breakout scenario where the market broke above this triangle and is pulling back. Now, the market is below. Normally what happens in a fairly strong market is that the market finds support at this trend line, but it's definitely not unprecedented for the market to go below the trend line and then rebound. So you could be potentially still in a breakout scenario with the markets. Remember, the markets, although there are rules that the markets often follow, oftentimes enough the market behaves like a bad child and does not follow those rules and essentially does what it wants to do. So we could still be in a breakout scenario just because the market has traded below the trend line. That doesn't mean it cannot move back up. Now, if we continue back to the downside, what we could see is that the market could test this trend line here. And it could even breach a trend line because anything is essentially possible with the market. So look for some support, however, in this 112.80 region, and if that's breached, the 110 region is the next area of support. Taking a look at the Canadian dollar, we are pulling back slightly this morning. The market has really been on a run from 120 up to just shy of 134. So this market is definitely due for a pullback because markets don't normally just go up forever. You normally get some form of pullback. But support is at this 130 level and resistance is at this old high in the 133.50 area. Japanese yen seeing a return to some stability. The market, just clear these lines. The market remained above its critical support in this 116 level, and the market has rebounded. So this uptrend in the Japanese yen has not really been broken as yet. Or we could be in the beginning of a downtrend, but I would want to see these areas at this 116 level be broken. And if that happens, that could signal a larger move down in the USD versus the Japanese yen. Now, I was speaking to someone yesterday about his trading, and he told me he was having a rough time over the last couple of months. And what I was trying to explain to him, and it happens to every trader, it happens to me, it happens to every professional trader out there. And I touched on this earlier in the week. When you are trading in real life, not fantasy trading, when you are trading in real life, you'll have times when your portfolio is down and it moves up, and it down and moves up. So your portfolio never just goes up and up and up and up. That is what happens in fantasy land. A real life portfolio experiences what we call the drawdowns, and these are periods where you may have a couple of losing trades in a row. Now, the mantle of a good trader is whether you can come out of these drawdowns. So if you are drawing down 10%, maybe 12%, 13%, that is pretty normal in the Forex market if you are aiming for higher returns. If you're aiming for a 30%, 40, 50, 60% return per annum, then a drawdown of 10, 20, 12%, even 15% is very normal. And what you need to ensure is that you are able to withstand the drawdown, because when the market start to trend again and the market start to behave according to your system, that's when you make the profits. And then guess what? At the end of the period, you'll be making profits where your account may go up, and then you may experience another drawdown. Then it should go up, another drawdown. You may have periods of stagnating portfolio growth, and then it may move up. So a portfolio normally looks like a chart. It's not just something that goes up, 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 up. You normally see up. This is how a portfolio normally looks in real life. It may come down, may have periods of down and then up, then down, up. So in summary, when you're having a drawdown, just make sure you're not risking too much, because drawdown is inevitable, and a drawdown is a part of every single trading system out there I've ever seen has drawdowns. So it's very normal. Now, one of the classic mistakes that investors do make is that they may have a very good trading system that's very good, and then they are risking too much per trade. They are risking 7%, 8% per trade. So when you have a drawdown, let's say you have 6 trades that go against you, and you're risking 8% per trade. 6 eighths is 48%. So you'll be down 48%. So if you have a $10,000 account, you may be down just shy of $5,000. Now, it's more difficult to dig yourself out of that hole, because if let's say you're down to $5,000, you would then have to make 100% on that $5,000 to get you back to the $10,000 of your original equity. And so that's why normal drawdowns last 10-15%, and then what you can do is dig yourself out of that once the market starts to trend again. So that was what I was explaining, because in the Forex income system, our members experience drawdowns also. And the members who have the most success are the ones who have the patience to sit through these drawdowns and let the market ride. Because it's often I see members join the program, they experience a drawdown, and then they are out in 1 or 2 months. And then if they had remained in the program 4, 5, 6, 7 months down the road, they will be at a considerable profit. Okay, so that was enough of that little mini speech. Taking a look at the gold market, not the gold market, the stock market, because that has been in the news a lot. We see that the market has rebounded yesterday, and the market remains above critical support. The swing low is critical support in the market. The market remains above critical support. Yes, it did break below this 2000 region, these 2000 lows, which could potentially be very bearish. And so we just have to see if the market, if it comes back up, are we going to start a series of lower highs, lower lows, or is this just a mere correction and the market will head back up? That's something we'll have to wait and see. Okay, if you are trading the Australian dollar, you see that the market is still in a pretty strong downtrend, and the market has been in a downtrend for quite a number of months now. But if you're in the British pound Australian dollar, we're receiving a pullback, because the British pound has pulled back over the last couple of trading sessions here. So as you remember, back in March, we were speaking about this market. Market was in a triangle. Then the market broke out of the triangle and headed to the upside pretty well. Okay, so if you like to have your trading signals, if you like to have these or signals sent to your trading account, you can click on the link below to get more information about our program. Now, the markets are in a bit of a volatile state, and they are essentially trying to sort themselves out. And I believe once we get over this rough patch, we will see trending markets into the new year, because the September to November, December period in the currency markets are normally the best trending times. You'll find some very nice trends between September and December. And if you're thinking about the Forex income system, now is definitely a time to get in. If you're in the Forex income system, you are definitely poised to take advantage of the trends that I see coming in the next couple of weeks to months. Okay, thank you very much for listening, and I hope you have a wonderful day.